Wednesday, September 19th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning, I'd like to talk about the subject of trade tariffs. There's a lot of that going on now, the trade wars, Trump imposing tariffs on the Chinese coming back imposing tariffs. And I want to talk about my personal experience living in Brazil, about trade. I also want to talk about what I think in the end of the day creates a lot of the problems with world trade, and that is the monetary system. I think it's at the root of all these problems, and I'll look at a policy that was implemented mostly in Latin America from 1930s onwards, called import substitution. I want to talk about multinationals also investing in developing countries, and how that can be actually a good thing for the developing countries, and will not really affect the how can I say, the developed countries, and how it used to be. I think before the age of full-on globalization, so to speak. I will, though, before that, look at the markets this morning. So it's 8:30 a.m. Yesterday, a very strong stock market. Prior to the open yesterday, the day before, the futures were hit hard because of all the trade talks. But then I think the Chinese came out, and they weren't as hawkish and belligerent. So the stock markets rallied strongly. The Dow, I think, was up over 260 points at one point, but it still finished quite strong. It's only a few hundred points off the all-time highs from January. So this morning we've got spot gold at 1204. So gold is actually up almost $6 or 0.5%. The range has been 1197.50 to 1204.83. Silver 1422, so up 8 cents or up almost 2/3%. Range has been 1412 to 1425. So metals wholly on steady for now. The stock market, the Dow is up 37 this morning. The future up 0.1%. S&P up to 2.25. Underperforming slightly there, and the NASDAQ 100 futures up 9 points or 0.1%. The currencies, well, sterling still fairly strong, considering we've been below 130 recently. It's 131.66, up 18 pips. The euro is right around 117. It's up 33 pips, 0.25%. And the dollar is down 6 pips against the yen, 122.29, so virtually unchanged. Crude oil rebounding again. WTI now almost back up to 70. It's at 69.82, up 1/3%. Nothing really to talk about as far as emerging markets is concerned at the moment. Things have calmed down. The 10-year yield yesterday actually broke through. Well, the day before it broke through a little bit and then came back down below 3%. But yesterday we rallied up 6 basis points, which is quite a big move. This morning we're at 305, down 1 basis point. Again, the key level there to watch is 313, which is the high earlier this year. But we are at levels at 4-month highs in terms of yields for U.S. bonds. Why is this important? Well, because it determines the cost of credit all around the U.S. economy and the world. Needs to keep an eye on that. So now, last night I did a live stream. Some people asked about what I thought about tariffs and trade. And I have to say it's a very complex subject. It's not as black and white as people think. So I first want to look at what the U.S. Constitution says about, tariffs. There is an import-export clause in the U.S. Constitution under Article 1, Section 10, Clause 2. And it's weird because up until a certain point in the 1800s, it wasn't sure. It says here in Wikipedia, in 1869, the United States Supreme Court ruled that import-export clause only applied to imports and exports within foreign nations, did not apply to imports and exports with other states. So you kind of wonder, when George Bush said that most of our imports come from overseas, if that was just a stupid mistake, or maybe he actually read the history and that about when imports used to come from other states. I'm not sure. Anyway, that's just a little tidbit. But so what does this Article 1, Section 10, Clause 2 say? It says, no state shall, without the consent of the Congress, lay any imposts or duties on imports or exports, except what may be absolutely necessary for executing its inspection laws, and the net produces of all duties and imposts laid by any state or imports or exports shall be for the use of the Treaty of the United States, and all such laws shall be subject to the revision and control of the Congress. The other interesting point about it is that there's a case, Michelin Tire Corp versus Wages, and this is the decision, and I think this is really interesting. It says, and I quote, the framers of the Constitution thus sought to alleviate three main concerns by committing sole power to lay imposts and duties on imports in the federal government. With no concurrent state power, the federal government must speak with one voice when regulating commercial relations with foreign governments, and tariffs which might affect foreign nations could not be implemented by the states consistently with that exclusive power. And this is where it gets interesting, the next point. It says import revenues were to be the major source of revenue of the federal government and should not be diverted to the states. And harmony among the states might be disturbed unless seaboard states with their crucial ports of entry were prohibited from levying taxes on citizens of other states by taxing goods merely falling through their ports to the states not situated as favorably geographically. So that's another interesting point. I think the framers, they were looking to fund the federal government through imposts, duties, and tariffs. So with the subject of trade and imports and tariffs, I'd like to talk about my personal experience. Some of you might know I've made a video before about when I was younger. My father was a keen sailor. He used to sail in Brazil, and he decided back in the 70s, I must have been around, I don't know, 10, 11, and I remember it very well. And this was not his business, but he decided to do a joint venture to build a dinghy called the laser dinghy, and brought the first laser dinghy to Brazil. I think it was 1974, and he bought it in the States and shipped it over, and it proved very popular, and but it was very expensive to import it, because at the time Brazil had something called a policy of import substitution. So I'll look into import substitution now very briefly. Basically, after the 1930s, because of the Great Depression, and I think we can blame, I blame personally the Great Depression on the easy money of the 1920s, on the fact that the world went off a gold standard, especially in Europe. The US hadn't gone off the gold standard, but money was very easy, and you had the roaring 20s, and then you had the great crash. Some people blame the Fed for it. I think it was more the monetary policy to keep the pound overvalued in the 20s, and that led to all the troubles in the world in the 1930s. And import substitution basically was a policy that was used mostly in Latin America to, how can I say, block imports, industrial imports to Latin America, because in the 1930s, Latin America had trouble getting the revenues because of the Great Depression. Most of their exports were commodity goods, and they weren't getting enough revenue, so they couldn't import all the industrial goods. So they decided to basically bring industry to Latin America, but they had to block industrial goods made in the first world, and that was called import substitution. So if you wanted to import something, you couldn't, or it was very expensive. So we started getting industry developed. And to some extent, that wasn't a bad thing, but it didn't really work. And with my father, what happened is that the laser dinghy, it says here, it says the international class, laser class sailboats, also called laser standard. And the laser one is a popular one design class of a small dinghy. And if you don't understand, with sailboats before the laser, anyone could make a sailboat as long as the measurements were within specifications, the class of sailboats. But the laser had to be, was developed by a company called Performance Sailcraft, and they were originally from Canada, if I'm not mistaken. And they're still around, and there's very specific rules, materials that you have to use to build a laser, and it's still today. So what that means is that you can't have someone make a laser and make it different and better or faster. It's just one standard laser. So when my father actually, and this wasn't his main business, but he decided to do that because he thought it would be good, maybe business-wise, and also to grow the laser class in Brazil. He in joint venture with Performance Sailcraft, they didn't build a factory. There was already an existing factory there. They took over, and they started building the sailboats. And it was really a good thing. But what happened was that there were so many, how can I say, regulations, import duties on raw materials that were needed to build the sailboat. And one of them that I remember really clear, vividly, my father used to tell me, was Irex or Arex. And it's a Swiss material that had to be used and is probably still used in the lasers. And it's basically used under the deck because it's a fiberglass boat, and it's to harden, it's high performance structural foam, and it's to harden the deck because the laser dinghy is so fast in high winds. And if the boat is bumping along the waves, if you don't have the Irex, it can break the deck. So that was a really important material, and it was really expensive because it only comes from Switzerland. And at the time, Brazil had a lot of duties and tariffs and things. And my father, unfortunately, decided to sell his share of the business because it wasn't worth for him financially. And he had other business. This was not his main business. But there you go. That's a point I wanted to make. With tariffs it can also hurt the domestic industry because you've got a lot of raw materials that you have to import. And that's where we come to today with the problem of rare earth minerals. And I've known about this for many years. And so right now with China and the US, there's an article here from yesterday on Bloomberg. China's grip on rare earths may have proven too strong for Trump. So what happened here? So I'll read from Bloomberg. It says, the US appears to have shelved its plan to levy tariffs on a critical collection of minerals used in everything from hybrid vehicles to electronic gadgets, mobile phones, and military hardware. Rare earths, including scandium and yttrium, are absent from the list of about 200 billion of Chinese goods on which the Trump administration plans to impose duties from next week. they were among a number of items scrubbed from the preliminary target list and released in July, along with car seats and Bluetooth devices. So China controls, I think, 80% exports 80%, or the US imports 80% of its rare earths from China. China is is the biggest producer of rare earths. They dominate this sector. And what are what are the industrial uses from rare earths? Well, I got this from this NamibiaCriticalMetals.com. It says, so let's have a look here. Scandium, aerospace framework, high intensity street lamps. Yttrium, TV sets, cancer treatment drugs, enhances strength of alloys. Lanthanum, camera lenses, battery electrodes. What else? Europium, color TV screen, fluorescent glasses. So you get the idea. Without rare earths, everything that modern gadgets and everything is very hard to produce. If we can't really, unfortunately, China has almost like a monopoly of this. Yes, some of you might say, oh, but in a free market, we need free trade. It's not as simple as that. I think the problem, in my opinion, the biggest underlying problem about disruptive trade is the monetary system. I think if you don't have a fair monetary system, you're not going to have fair trade either. And for the US, you know, I think the fiat money system hasn't been good, but it has been good for the rest of the world. And I think that's what Trump is looking at, because if you look at this chart, US merchandise trade balance from 1895 to 2015, it's, you know, this picture tells the whole story. Prior to the end of the Bretton Woods Agreement and sound money, look at how the U.S. never had a trade deficit from 1895 to basically 1971. And look what's happened now. The other point I'd like to make today is about globalization and how I think it's gone the wrong way. Or is not a really great system. Because I think in the 50s, 60s, and 70s, with this import substitution, especially in Latin America, what the big corporations from the United States, Germany, and other European countries, what they did, yes, they did build plants in Latin America. They built cars there, you know, consumer goods. But these were for the South American, Latin American market, or Asian market, and the market in Europe and North America were completely different. They had different goods, different models, and you see Germany built cars in Brazil, the German companies, Volkswagen, you had also General Motors, Ford, but the cars that were built in Brazil were for the Brazilian market. They were not exported to the United States, and much cheaper than, you know, the American cars. And I think that kind of makes sense. But nowadays, with, you know, since Bretton Woods and globalization, what you have is American or European companies going to other countries, producing goods very cheaply and shipping it back to their home countries. I think that's a problem. But to conclude, my underlying message about tariffs, trades, and relations between countries is still the monetary system. We need to go to a sound money system where goods and services are valued fairly, where politicians from different countries cannot manipulate the money. So if you enjoyed this video, please like, share it, click on the bell if you want to get notifications when I make videos. Subscribe to the channel if you haven't yet, and you can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.